So let's start to change the way the data is flowing so you can see your financial results consistent with how you're talking about the business. That helps with, reporting, but also budgeting and forecasting and kind of tying it all together so you're not spending time almost translating your financial statements into a way that you're thinking and talking about the business. That's
It's
one way where I think about the difference between bookkeeping and a more kind of accounting and advisor partner, and when it might be time to graduate to the next level.
Yeah, there are a lot of things that advisory component, the more, engaged, proactive accountant will be looking at, that oftentimes those expectations are put upon a bookkeeper, but maybe
Mm-hmm.
the skill set, the experience, the industry knowledge isn't there. And so when a company is engaging an outside provider to support this function, what are the questions that they should be asking, and what is the right time for them to start looking for that kind of next level of support for their business? Here we go, and we're back.
We
Welcome
made
to
it.
Building in the Wild. We've got what? Accounting operations, like scaling from 0 to 1 today, talking through what that looks like, how to build it, things to be thinking about, and conversations that we've had in the space. Stacey, glad you're here.
Happy to be here. Yeah, this conversation sprung from a couple clients we onboarded this week who didn't have anything, no accounting infrastructure, nothing existed. So it was really starting from scratch, and thought it'd be a good time to talk through what people should be thinking about, what business owners should be thinking about when they're starting from scratch, and then from there progressing and graduating to the next level.
It is wild to me. We operate really in this like pre-seed seed through Series B space, right? We operate in a very specific stage rather than industry. And it never fails to baffle me that companies still have gotten to this level of revenue or activity without having anything set up. And we seem to have these
Mhm.
conversations once a week.
It is quite surprising. I think it's mostly because, in my experience with startups, companies usually have certain things in place, and I'm finding that that was the anomaly, not the commonplace. So it's been fun to just enlighten people on different things they can improve on, different systems that can really make their lives easier, and then go and help them do that. It's pretty rewarding to hear the thanks and see it work better and faster and more efficiently.
Totally. And it's one of those things too where founders are so focused on product and selling that product that accounting and finance is really an afterthought, as it really kind of should be for early
Mhm.
stage, like get your product solid, get your product to market. But at the
Mhm.
same time, when you start to think about your financial infrastructure, your finance department, your accounting, the nuts and bolts of accounting and how that supports your decision making, having a focus on that early on is really, really imperative to be able to make those quality decisions in order to scale.
Yeah, and I think there are there's a very short list of the minimum requirements that owners, business entrepreneurs can follow to meet that threshold, like just the minimum to get by. I think oftentimes the trigger for business owners is, oh shoot, I got to file my taxes. And you get to that point, okay, I don't, you're kind of tick and tying what happened throughout the year, trying to find all the information that's needed to file those. So if we back up and try to unwind a little bit about what goes into that and how we would recommend companies get started with kind of that bare minimum infrastructure that can really, set them up for success. Um, I think there's probably like two or three major components to that, unless you think there's a few more.
Yeah, it's really, in a lot of ways, easy to get started, right? Like we see this every day, but we're also in the business of trying to educate people on how to set up that infrastructure. And then when that time is right, utilizing a group like ours to help them manage that. But I think it's probably 2 to 3 things to get them up and running. And, we've seen this a handful of times is the commingling of personal and business,
Mm-hmm,
where
mm-hmm.
you've got personal cards paying for a bunch of stuff. Maybe you've actually connected personal and business accounts within a QuickBooks that you've set up because you wanted to get some type of infrastructure. And it's wild. Like you can have an initial setup, like get QuickBooks online and then start to manage it. But you can also screw it up really, really fast.
Yeah. It can be costly too. But I think if we were to go back to day one, right? You have a product or you have an idea and you're saying, okay, this is what I want to do with it. I'm going to buy some things to get going. I think the number one and most important thing is to get a business credit card. It's actually, I would recommend doing that maybe even before you have a business. If it's not certain, like just find a way to very easily separate items that you're spending for the business versus items you're spending personally. Having a separate credit card is a very easy way to know anything that's on there that's business related. In tandem with that, setting up the actual business entity, usually an LLC with the state registration process. And, if you do that first, then getting the credit card under the new business EIN and actual setup also recommended. But I'd say the number one thing that makes everything much easier, a separate way to spend on the business through credit card.
Yeah, because you can get to the environment where if you don't have that and you and or co-founders or others as part of the business are making payments on behalf of the business for various transactions that exist, and then you start to set up your infrastructure after the fact, then you have to go back and go through this whole analysis of who spent what on what business expense, how do we aggregate all that data? And so if you're able to separate it from day one, then you're setting yourself up immediately for, at a minimum, a better compliance experience at year end.
Yeah, just an easier way to not have to comb through old statements or receipts or anything like that. So that's like very simple, easiest one to accomplish. But now let's say a business owner is at a stage where they're diving in. They're going to go for it. Maybe they're doing it on the side, or maybe they're going all in and full time, spending time on this startup. At what point, Roman, would you recommend the next phase? Right? Is that an accounting system, or is it a payroll system? What would you think through to get that next level?
Yeah, generally most companies are not going to fall under this venture capital backed path, right? And so more often than not, they're starting out as LLCs. And I would say once you've established a point of, hey, I'm going to commit to this and make this a business, then you start to look at having that established entity and should probably start to look at something like QuickBooks in order to start managing the financials of the business. And it can be done very, very simply. QuickBooks has a lot of tools in order to establish kind of a base level chart of accounts, P&L, and a balance sheet to start managing day to day. But I would do that as soon as possible in terms of I've committed to this business. I want to make this a viable entity moving forward. But I would do that before approaching payroll or other ancillary
Mhm.
systems.
Yeah, I agree. I mean, we've seen some even smaller companies that have then progressed and grown where they had QuickBooks, but they never touched it. And then at year end, they would find a tax partner who would go through and sync things through and like get their books to a place where they could at least file the tax returns. But having the ability to have that separate system that connects to the business credit card, connects to the business bank account, that, if you're small, once a year, your tax CPA can go in there and reconcile things if it's still like not super busy. But I think beyond that, right, if you're getting to a place where A, you're trying to raise money, B, like you're either spending a lot of money or you're bringing in a lot of money. There's a higher transaction volume to the point where it's valuable to see monthly reporting data, just like monthly trends and what's happening in the business. I'd say that's where I would recommend a bookkeeper, someone who's in there
Hmm.
at least once a month, coding everything out, posting transactions, keeping your bank live so you know real time how much cash you have on hand, what your revenues are each month. Um, Someone, I'd say a lower cost option, obviously depending on the company. This is assuming you're kind of bootstrapping it and not incredibly um, funded or to any extent. So kind of lower volume, but enough to warrant monthly reporting or monthly touch base on what's happening in the business. Probably time to get a bookkeeper.
Yeah, and we're still several points removed from turning the accounting function into an asset for the management team, right?
Yes.
And so I
Yes.
think when you think about bringing on outside support to take care of maybe some more of this administrative bookkeeping type tasks, um, you think about what your time is worth. what dollar per hour do you
Mhm.
attribute to your time relative to how much time you're spending on the business in accounting? And that's when I think you can start to see that value prop of like, hey, if I pay somebody 50, $60 an hour to do this, and it takes them 5, 6, 7 hours a month, I'm my ROI is much higher when I can use my time more effectively on the product or sales side of things.
Yeah, that's a good point. It's more of the value proposition and the time spent, because this at that stage, it's not incredibly complex, nor are you getting crazy insights from the reporting. It's just more of a compliance and up to speed item to maintain the detail on a more consistent basis.
Yeah, and on that front, when you're exploring the use of kind of that entry-level bookkeeper, there are many, tech-enabled solutions. There are independent bookkeepers. There are firms that do just that bookkeeping layer at a low cost. And I don't think that you should go into that with the expectation that they're going to know your business, they're going to provide advisory services, they're going to like really improve the infrastructure of your financial department. It's really just knocking off those lower level tasks so you can focus on the business. But from an expectation standpoint, make sure that you're not misaligned in terms of
Hmm.
what you anticipate a bookkeeper actually doing for you.
That's a really good point, especially when you're thinking about how quickly the company's growing, or if you're going to be progressing to get a fundraising round, something that's going to make you or require you to do more complex accounting or reporting.
Yeah.
Um, if a bookkeeper solution is valuable today, if you're going to be growing or need like more detail, it's probably not going to be the solution for tomorrow. And this is actually an interesting topic, Roman, for our firm specifically, because usually we want to work with seed through Series B. We've had a couple clients come in the past couple months who typically we'd say, you're not really there at the level in which we usually engage with clients, and we'd probably recommend them to someone else. But a few of these clients, we can see that, oh, they have plans to fundraise, they have plans to grow, they have plans in the near future to become the type of client we work with all the time. So it's kind of also taking an assessment of your growth plan, what your agenda is, to say, will this solve my today's problem, or will it be a long-term solution for what I want over time?
Yeah.
And that timeline is different for every business. So it really depends. And some people never grow. Some people are solopreneurs in that like bookkeeper space forever, and that's totally fine. But I think
Hmm.
it's addressing or assessing what who you are, what you want to be, and how quickly that you'll get there.
Yeah, it's a great point where one of the recent clients we started working with had that exact characteristic, right? They were just starting the entity, but they had an existing partnership with a contract slated for the beginning of next year. And so that was going to bring in a substantial amount of revenue. There's additional growth goals next year. And so they came to us with an intent to have their financial infrastructure set up to manage their bookkeeping. And so when you approach a group like ours, an advisory group, on getting this initial infrastructure stuff set up, we're doing it through the lens of a business owner. And we're saying, how can we create an infrastructure that becomes an asset for the business owner in terms of the reporting, the data that they're getting to make decisions? Whereas the bookkeeper is not going to be looking at it through that lens and really just managing this transactional activity of the business.
I think as a business owner, it's challenging to vet for that in determining a partner to work with from an accounting perspective. I think most companies are going to say, we'll be your valued partner, we'll help you grow. Um, but bookkeeping is very different from accounting and advisory.
Hmm.
Bookkeeping, typically when we see these lower cost solutions that people engage with for good reason, often, um, it's more of a reactive relationship where your bookkeeper, you're telling them, I want you to do XYZ. They do XYZ, and that's it, right? They're
Yeah.
doing what needs to be done to satisfy the tax return filing. Um, but I'd say when you get to the point where seeing your top line sales amount doesn't really give you the insights you need in your business. If you have different revenue lines and you're trying to analyze margin by channel, or just grouping your expenses to easily tell you, what are my total employee costs? What are my total sales and marketing costs? If you're spending time monthly asking these fairly simple questions, it might be an indication that you have a bookkeeper who's getting things done, but not thinking about your business proactively to help you give you these answers before you even ask the question.
Yeah.
And that's often the first thing we do when we engage a new client. We say, hey, your chart of accounts is structured this way. When you tell me about your business, I hear three different kind of revenue models. All I see is one line of sales. So let's start to change the way the data is flowing so you can see your financial results consistent with how you're talking about the business. That helps with, reporting, but also budgeting and forecasting and kind of tying it all together so you're not spending time almost translating your financial statements into a way that you're thinking and talking about the business. That's
It's
one way where I think about the difference between bookkeeping and a more kind of accounting and advisor partner, and when it might be time to graduate to the next level.
Yeah, there are a lot of things that advisory component, the more, engaged, proactive accountant will be looking at, that oftentimes those expectations are put upon a bookkeeper, but maybe
Mm-hmm.
the skill set, the experience, the industry knowledge isn't there. And so when a company is engaging an outside provider to support this function, what are the questions that they should be asking, and what is the right time for them to start looking for that kind of next level of support for their business?
Yeah, and I think a good partner is going to help guide that process, right? Like if we have someone come to us and say they want XYZ reporting, um, but they're, don't have the cash to support it, can't really, um, don't really have the resources available to get to that level, we'd have a conversation around, yes, this would be valuable to you, but here are some other things we think you should be really honing in on to drive success for your business versus spending time, money, and resources to getting reporting metrics that really aren't going to drive the revenue growth. So I think it depends too, right? Like we're not going to recommend an inventory company get a new ERP system if they can't afford that, or if
Yeah.
they can find the solution in an easier way at an early stage through Excel or Google Sheets. I think there's a time and place for graduating to different systems and processes depending on priorities and growth planning for the company.
Yeah.
Every
You know,
company is
we
different too.
Oh yeah, yeah. That size and complexity restraint in terms of looking for an outside partner support, it is very different for every company. We had a prospect conversation this week who's utilized the same outsourced bookkeeper accountant for the last number of years, and we're getting in there. We're looking at these transactions, these journal entries that have hit over the last several years, and we're just befuddled by some of the activity that's taken place from an accounting standpoint. And
Mhm.
so if I'm a business owner, how do I know whether or not I'm actually getting a quality service, whether it be a bookkeeper or an accounting firm that's providing an outsourced service?
I think for me personally, that goes back to what questions are you asking about the performance of your business?
Hmm.
How well did XYZ revenue lines perform this month compared to last month? Again, if you have one line of sales on your income statement, but you talk about sales in a much more detailed way, you can have that. You can have the actuals in your financials, and you can have that data readily available to you. And same thing on COGS and OpEx, right? If oftentimes in this specific scenario, when there's a bookkeeper who may may just not know how to make these level of improvements, a lot of the conversations are around margin.
Hmm.
And this line of business, I don't know what the margins are, or like we have reporting and COGS, but I don't really trust them, or we're not getting things as timely as would be helpful for me to make decisions. Those are the type of things. Often, unfortunately, it's retroactive, right? You don't realize it until
Yeah.
after you've been working with this partner for a while, and it can be really challenging to vet these type of things. I think there's no shame in asking for references and talking to existing clients of
Hmm.
of whoever your partner is already servicing. I think that's a really great way to understand more clearly what level of service, gauge what type of companies they're servicing, whether it's consistent with your complexity, your growth plan, and your needs over time.
Yeah. I think there's the inverse solution too of bringing on a firm or an advisory team too early, right? Like
Yes.
you may have a bookkeeper and they're doing work for you, and you're kind of uncertain of whether or not it's good or bad, but it might have been really good for the stage in which you brought them on, but you maybe outgrew them over time. But the inverse of like when you bring on that advisory group, the accounting firm, a little bit too early, you're cramming a Ferrari engine down into a Honda Civic, and it may be the wrong motor for your business at that point in time. And so like that's something that we're hyper cognizant of making sure that the level of service, the level of reporting that we provide to our clients mimics the size, stage, and goals of the business.
Mm-hmm. Yeah, I feel like it's our fiduciary duty to almost tell a client no when they're not ready for us, or it's not a wise financial decision to engage with us prematurely when you could better utilize these funds elsewhere. And also make those recommendations on systems and improvements and areas to be focused. Because to be fair, the finance and accounting realm for a lot of business owners is scary, right? It's something that people don't often understand. There are some who grew up in that space and understand it really well. But for a lot of founders and business owners, most people are like, am I doing it right? Can I do this? Is this okay? And they feel that they need the top notch, gold tier service today, when in fact there are alternative solutions to really get them what they need in immediacy.
Yeah, and I think that's an arena where, we've pivoted away from that like platinum, gold, bronze tier type solution to provide more customized services to our clients. And we're of the mindset that we want to educate first and then
Mhm.
build out a service that makes sense for the company if it's the right fit. So once we've qualified everything,
Yeah.
making sure that we can deliver a quality service for their growth plan. All right, now we're going to move forward. Whereas, there are a lot of firms out there that are willing to take on just about anybody for any dollar amount and will
Yeah.
force them into specific buckets that may not be right for the company.
It leads to frustration and other
Yeah.
challenges. Yeah. I will say, for us, the most important thing, we haven't really niched specifically. Sure, early stage growth companies, we have some outside of that bucket. Um,
Hmm.
it's a willingness to adopt new systems, new software, and new process to help mature the financial function,
Yeah.
elevate the financial function, some would say. And that to me is the most important piece, right? If you're mailing paper receipts, um, if you're not willing to stop that and find an alternative solution where there's no paper, it's all electronic, then we might not be the right partner for you.
Yeah.
But we want to work with companies who are willing to put in the systems that are best in class and are ready to grow and scale for the infrastructure.
It's such a good point because that is a topic that we talk about often with companies is, are you willing to make changes? And it's not top of mind for every company that we talk to, but for a lot of business owners it is because they've identified this friction that exists.
Mm-hmm.
And they're thinking like, oh, I'm spending too much time on invoicing or, billing, whatever that is. And they know that there's a better way to do it, but just aren't equipped with the right resources, the right connections, the right guidance to help make that change. And so when we're
Mm-hmm.
having those conversations, we want to make sure that, hey, are you open to building this accounting infrastructure in a way that allows you to scale? And almost everybody says yes to that. But at the same time, we're asking prodding questions to understand the willingness and openness to that.
Totally. And I think, to toot our own horn for a second, we're trying to build a team of really strong accountants who are operationally minded and have that experience, where most accountants who've grown up in the advisory space don't have experience working with the sales team, setting that training
Yeah.
process, understanding what they're facing on, day-to-day schedules in life, to then make it easy for them to adopt a new process.
Hmm.
It's almost like we're functioning as an internal team member who's working collaboratively, understanding pain points across different teams. And it's not easy to change behavior, right? So you need to come to it with an understanding that, this is where we want to be. We might come in a little bit lower and kind of have to make concessions on both sides. But it's the willingness and the commitment to adopting to these changes that are going to benefit the entire organization.
Yeah. All of that is pure gold for business owners. And one of the things that we strive towards is building up that infrastructure, servicing the client from a month-to-month recurring basis, and then helping graduate them to help them transition to a full-time hire if that's the right move. And
Mm-hmm.
so like we're working with a goal in mind to help them reach these milestones to effectively work ourselves out of a job. And it's counterintuitive, but if that's what's best for the company, we want to be in the position to help usher that next stage of growth and transition for the business. And I think
Mm-hmm.
that's a mindset shift that we have that not every accounting group likely leads with.
Agreed. Yeah, I think, we started this episode talking about like day 0 to day 1, and we talked about like, getting a credit card, getting QuickBooks. Um, I want to hit on like some other things. When you have a QuickBooks account, you're starting to pay more people, whether it's 1099 folks, or maybe it's vendors, maybe you've hired a person or two. I want to hit on some softwares to be mindful of
Yeah.
as you start to explore that kind of next stage. It's still early in the business process.
Yeah,
What are some of your faves?
from what we see on the payroll front, contractor, international contractor, Gusto's probably one of the best tools that we've found, just from the ease of setup, of compliance, make sure that that's managed appropriately. It syncs really well with QuickBooks. That's probably one of the tools that we've really leaned into in terms of helping set up that infrastructure.
I really like Gusto for someone who doesn't mind like click payroll and like setting up new employees. Like there is a piece of it that you as the business owner or someone on your team needs to be involved with. Like, okay, I'm bringing this person on. Let me log in. Let me create a an offer letter to the person in the Gusto
Mhm.
platform, set them up, do the all of the employment requirements. Gusto's very good at telling you need to register in this state. We can help you with that, and kind of guiding you through that. But each week you're going to have to run payroll. You're going to have to put hours in if necessary. For international contractors, you'll have to put all that data in. Um, Kind of managing that a little bit more hands on versus a PEO alternative, which some companies prefer as well.
Yeah, I think it's important for a founder, early executive team to have insight into that, an understanding of how it works, and stay really close to that function, and until they grow out of that, right? Until they relinquish the reins to a PEO or to an onboard a team member to manage it. Um, but when I think about like that optimal tech stack for a company to come in and like really establish a scalable infrastructure, Mercury Bank is a great solution for banking, credit cards. Gusto's great for payroll, QuickBooks for your GL and accounting infrastructure. You look at a tool like Ramp for spend management and credit cards. And then there's a whole slew of other tools and systems that we would look at depending on the circumstance.
I do want to give a bigger shout out to Ramp too. Like if you're a new company, you've got cash in the bank, around $75 to $100,000, get a Ramp credit card. Very easy to manage spend in that platform. Create credit cards, whether virtual or physical, for new team members. Manage how much they can spend on those cards, and then also a bill pay option where you can have a bill from a vendor and pay via ACH. So a lot of functionality. And shout out to Ramp. I'm really enjoying using their product.
And this episode is brought to you by Ramp. No, they're
Someday,
not
someday.
sponsors. So we just like the tool a lot. And same thing with Gusto. Like these are really scalable tools that we found can take, day one companies up to, you know, 50,
Mhm.
60, 75 plus employees very easily.
Mhm. Yeah, I can't. I'm trying to think of some other softwares for early stage, but those are my favorites. I think you and I are aligned on a lot of that.
Yeah, depending on the industry, that there are a lot of tools that we may look at and recommend, whether it's SaaS specific or CPG for inventory, things like that. But at a base level, when you look at those tools, they're applicable across a wide industry. And so, maybe we can have another session on tech and CPG and what we've seen from inventory management, things like that. But I think that's a really good start for any business.
The only one I can think of in addition to that is Stripe for customer collections, or
Sure.
linking that to your website to inbound cash. But yeah, I think that's a good start for companies getting started and thinking about that tech stack, thinking about what needs to be put in place to just be ready for growth and just be prepared for segregation and tax compliance and taking on new business venture.
Yeah, it's exciting, and there is so much going on day one in any company, and accounting is the last thing on people's minds. So if you can start to take some of these steps to set up a good infrastructure, you will set yourself up on a much better path moving forward and reduce your cost of potential like cleanup, catch up work in working with a group like ours or somebody else. And so good to focus on day one.
Yeah. Well, we brainstormed before this episode of some gourds.
Some gourds, yeah. We had a new team member, an accounting director, join last week, and on day one, I've got the full send welcome package with a hat and shirt and all that stuff ready to go, and she comes strolling into the office with a bag of vegetables, with tomatoes and squash and cucumbers. And it was awesome. It was like her gift, because her full send is gardening, it's plants. And it was just so cool to see that on day one. And I came home with the ability to now make a really nice salsa, and it was awesome.
That's amazing. That is the most Kathy thing I've ever heard, is showing up with some plants and a little welcome. Love it.
It made
Shout
my
out
day.
Kathy. Really happy she's on the team. It's the start of our new growth.
It is. We are no longer day one, and we have a good financial infrastructure and a quality accounting director, and now we are hitting on all fronts. But I hope that conversation was helpful for you all. Feel free to look us up, find us on LinkedIn at Stacey Feldman CPA or Roman Villard CPA, and you can find us on our website at fullsendfinance.com.
Sayonara.
Thanks for tuning in to this week's episode of Building in the Wild. If you found value in our conversation, we'd appreciate a review on Spotify, Apple, wherever you get your podcasts. To stay up to date, make sure to hit that subscribe button. For more insights and additional information, our YouTube is at Full Send Finance, and our website is fullsendfinance.com. Remember, the business landscape may be wild, but you don't have to navigate it alone. Build together, go further. Until next time.